Good afternoon. How is everybody? On the Euro US dollar daily using the TachEon Warp software, we're seeing a couple things happening on the chart. First of all, when you're using our predictive tools, everything to the right of the current bar is a projection, an estimate in time based off what's been happening historically lately. So the program is looking back to the left and looking for moments in time where banks, institutions, any one of those slimy bastards are manipulating the market up or down. And so the software presumes that the market is in fact not random. And so our whole key to fame over the years has been assuming the market is not random and then projecting the times that the moves are occurring at forward into the future. And we can do that from a daily time frame all the way down to an intraday time frame. And so we've been posting into the forex trading groups online, and we let everybody know back on September 13th that there was a sell signal coming. Just like you can see in the future to the right hand side, there are signals coming in the future warning us when the next potential selling or buying pressure signals in the future are about to arrive. And so that move actually dropped us down in the direction of the trend all the way to the next buying date, about 237 pips, I think, if I'm reading that correctly. There's a really cool thing that we can do with time signals too. We can take any two gaps in time and split them into thirds, much like you would split a gap in price with fibs, the 50% fib or the 62% fib. We can split any amount of time into thirds, 33 and 66%. And you can see that sell signal coming in here at the first third. We're expecting that to last until October 17th. Welcome. My name is Michael, and I am the founder of the company backtothefuturetrading.com. And we are here today to look at what is possible when we assume that markets are rigged. And when we assume that markets are rigged, we can do some really cool stuff. We can assume that there are times that markets are moving in the future and project those times forward into the future. Bear with me here 1 second. I'm trying to load something for you guys. And no, I won't be able to do it. So earlier in the week, I sent out a bunch of times, those of you that are at the website taking your trial or getting these times automatically. And what we do to try to prove that this is real is send out the times every Tuesday and then follow along with what was expected to occur into the future. How many of you guys have been following along with those times? Yep. Okay, great. I'm trying to pull, let me pull those times up here for you on my side, and I'll show you what we were looking for on markets like the E-mini S&P, the pound dollar, Ethereum, NASDAQ, oil futures, the DAX, and so on. And we're just about loaded up. Stand by. Had a bit of a late run this morning. Went outside and my truck was leaking transmission fluid on the driveway. It was fun trying to figure out where all that beautiful red fluid was coming from. So over here, we send this out, and if you're part of the group of people who've been taking the trial on the website, you'll see that we had access to markets like the E-mini S&P, oil, gold, the DAX, the euro currency, the Dow, the NASDAQ, the euro dollar, the pound dollar, and Ethereum. And so when we're looking at a market like the pound dollar, yeah, Earl, I sent you an email with some pictures. It was kind of cool. It was the weirdest little thing. Neither of us could have really predicted where we found the leak. All of the times that are on this chart represent behavior patterns. So Martin, everything on the top of this histogram was anticipating a move down, a selling pressure signal. All of the signals on the bottom of the chart were anticipating a buying pressure signal. And we've had this information published since Tuesday for Thursday. And in a moment, we're going to talk about what happened at those signals. And so this presumes that we can predict what direction markets are going to move. It's a horrible prospect every Thursday to sit here and wonder, did it work? The first few weeks I did it, I was terrified. It was a relatively new company. We had very few customers. And I remember thinking the first few weeks we started, what if it stops working? Now here we are 15 years later with a near perfect Trustpilot score with real traders. And I can tell you from experience that it works, and I get to prove it to you here today. So inside of your handout section, you've also got a book called The Hitchhiker's Guide to the Hitchhiker's Guide to the Histograms. And we're going to learn today that sometimes when we arrive, Martin, at a selling pressure time, it'll go up instead of down. And sometimes when we arrive at a buying pressure time, it goes down instead of up in the totally opposite direction. So we're going to have to deal with that. But the good news is that I've given you this in advance. In fact, this book has been in the handout section since 2016 of our webinars every Thursday. So when we come together, there's this horrifying proposition for me. Let me show you what I mean. I want you to realize how impossible my task is. On Tuesday, there's a histogram, and it has buying times on the bottom and selling times on the top. And then there's this experiment where I get together with everybody on Thursday. And in between Tuesday and Thursday, we've got this histogram guidebook, right? Telling us how to interpret some of the signals. That's one. And then number two, I've given you a trend trading system set of rules that we're going to use to evaluate whether or not the signals made money on Thursday. That's horrifying. From a marketing perspective, Lynn, there's so many things that can go wrong. There's so many variables out of my control. In fact, there's no variables in my control, are there? The proposition is that markets are rigged and we know the times where big moves are going to occur. I tell you when some of those signals might go in the opposite direction, and I propose a trend trading system if the moving average is going up or down. And then we'll evaluate what happens without any guru knowledge or manipulation or candles or signals that change after the fact 2 days later. That's kind of bananas. Well, what are the rules? What are the rules that we're going to follow? If you go back to the page that we were looking at here a moment ago, you'll see that in the very beginning, of the post, it says, we will be using this manual to interpret the signal patterns. That's the book I just showed you. We'll be showing how the signals can be traded by using one of two simple entry rules called signal with trend or the puncture trade. Well, what the heck is that? Well, here's what they are. Let me see if I have a shortened PowerPoint. Yep. So we have these times. What do we do when we get to them? Well, there's actually three things we can do. And I'm going to show you all three of those things here today. If you're a customer, I've got a new setup that I've been teaching in the webinars for a few weeks now that I want to show you too that we're going to use. We have these signals. And in the video, I mentioned we'll use a moving average to track the trend. And in the video, I'd say that we're going to use a 120 period EMA. Now, is there anything magical about that? No, it's just a 120 period EMA. The thing that's magical is I haven't changed it in 10 years, 15 years. It's the same EMA we started out using in the first webinar. When, Martin, we arrive at one of those buying pressure signals that are above that EMA, we're going to test to see if the banks are pushing the markets up again. And so we'll enter on the close of the candle, and our stop will be 1.5 average true range values away from the candle. Basically, on average, how big is a bar now? That plus 50% away is our stop. Entirely reasonable. Our exit is going to be the opposite signal. So in this example, at 6:42, our entry is at the close of the candle. Our stop is 1.5 ATR values away, and we exit the signal at the close of the 7:03 candle. Signal with trend. Okay. There's a variation of that called a crossover. If we have a signal that's below the moving average and it's a buy signal, we can opt to wait for that candle to close above ding, the EMA. Some people call these icebreaker candles because they break through the ice of the moving average. When that happens, we can enter at the close and put our stop 1 to 2 ticks below the candle, which crossed over. Does everybody understand that one? We exit at the close of the opposite signal. So in this case, we're looking at a window of time where something is expected. But if we use a trend filter, Martin, we need that thing to be on the other side of the moving average. Now, 2 weeks ago, Lynn, I started introducing a new concept, and I'm going to have to put it in the new video. But I do have a recording of those, so I can say I'm not pulling this out of my butt. That was a gross thing to say. When there is a counter trend signal, we're going to call these ACTs, aggressive counter trend signal. Now, Tony, when I have that 127 signal, it's counter trend, it's under the line, and that stop is way down here. At first, Larry, here's what I propose. We put a stop just underneath 1 to 2 ticks below the signal candle. So instead of using that full 1.5, we use the candle body itself. When it closes, we say, hey, let's try an aggressive counter trend signal. Let's see if it goes up all the way. So if we do that, we can enter and hold it all the way to the next signal. So Martin, if we engage the ACT protocol, we can get in earlier, or we can wait for the crossover trade. Does that make sense, everybody? I'm going to add it to our PowerPoint so we know, but we said this 2 weeks ago. We brought it up again. And you'll see that this comes into play a lot. But all of this is based on time. We know when this time is coming in the future. We know when this time is coming in the future. And so trading is easier because our stops are smaller. We don't overtrade, and we let our winners run for a period of time which is known. Okay. Now, the next one deals with counter trend trades a little differently. We have an option that we just learned about. Number one, if there's a counter trend trade like our 930 signal, Larry, we can try to short it right here until 948 with a stop just above this candle. So there's our ACT, aggressive counter trend trade. It fails in this example. No good. You get a consolation prize. The puncture trade is a failure with trend. So now, Ryan, if we move through the stop of the selling pressure signal, it means there's no sellers. There are no sellers. The time where they normally come in, they're not there. We looked around, we sent a bloodhound out sniffing for them, opened all the closet doors, no sellers. The market at the selling time kept going up and up and up. And right here at that breakout, we say no mas. We enter with one contract, or however many you trade with, one tick above the blue line. We hold it until the close of the next signal. And our stop goes one tick under the candle which punctured the line. Does that make sense? So we have a signal with trend. We have an aggressive counter trend entry. And if that fails, we have a puncture trade. Pretty cool stuff. And all of this was known before we got here today. We need to know if there is an edge to these signals that we know about in the future, right? Versus what all of you other knuckleheads are doing. You're using Heikin-Ashi. I love my Heikin-Ashi. Are you making money? No, I'm not, but it looks cool. I'm using order flow. Are you making money? Yeah, every once in a while. You're losing money? Yeah, a lot more often. Price action, volume spread analysis. Every month there's a new fad and a new website opening up. Now it's all AI. Look at our AI signals. Everything is AI. It's a squirrel in the back. And if he scratches his butt on the left side, the AI generates a buy. And if the squirrel scratches his butt on the right side, it's a sell. I can tell you this because I've met these people at conferences. They tell me things they don't tell you. It's not what you think it is. These companies are well-oiled marketing machines. Well-oiled marketing machines. So using nothing but the book with the histogram backwards patterns and these trading signals, how did the markets work today? Well, the big one everybody trades is the E-mini S&P. The E-mini S&P. And we've had this information, William, since Tuesday. Nothing's changed. Nothing's updated. Nothing's run afoul or amok. In fact, some of you will even take screenshots of the signals to make sure we're on the up and up. I want you to see a few things before I get started so you know that I'm not cheating. 940, 1005. 940, 1005, 945, 945. Tim, can you see that? Ryan? Hey, Michael Bleckley. Martin. Buenos dias. 825, 825, 845, 8:45, 7:35, 7:35. All of the signals that I gave you on Tuesday are the signals that we're seeing here today, 12:35, 12:35. So have I manipulated, Lynn, these times in any way, shape, or form? I just wrote you an email, Lynn. You've been checking us out since 2016. Yep, I sent it to you. What have we done wrong with you? Where have I failed you, Lynn? You're back in the website, looking at the videos again. I sent you a link to my calendar. I'd love to know. That's the longest stretch of time. That's 7 years. I must be doing these webinars wrong or incorrectly if I haven't convinced you yet. So let's take a look. Ready? I'm going to go through every one of these with you, one at a time. And we'll start an hour before the econ today, and we'll go through them. At 7:35, we have a signal with trend. The stop is 1.5 ATR values away. The close of the candle is right here. We exit by 8:25. It's a 2.5 point move. At 8:25, we have an aggressive counter trend opportunity. The stop can go right here. The entry is at the close of the candle, and it obviously stops out immediately, -5 ticks. At 8:25, we have the econ that comes out. The market closes below the moving average. It's a very large stop, but if you took it, it goes down a total of $450 maximum favorable excursion and finishes a whopping 5 ticks in your favor. We'll put the winners on the top and the losers on the bottom. Remember, I'm just showing you the rules that we declared before the video. Any webinar you ever come to that I'm teaching, the settings are always the same. They are the default value settings, 7/14/00, swing strength 8, calendar days. When we get to 8:45, ACT, aggressive counter trend, right? So what do? We can enter right here. We can put a stop just underneath that candle. We can go to break even when we get to 1-to-1 RR. So in this case, if we entered aggressive counter trend entry, the market goes 5.5 points in our favor before moving back down, at which point we've locked in a tick. We'll take it. That was a fun ride. Now, we arrive at 9:40. 9:40, your software goes, hey, Speed Racer, this is a pattern 4. We go back to the book, and how do we trade a pattern 4? Well, pattern 4s are weird because sometimes they go in the opposite direction. So there are 2 options for us with a pattern 4. Number 1, aggressive counter trend. We enter long on the close of the candle. Our stop goes 1 tick underneath the candle, and we're instantly stopped out from here to here, -5 points. Next option is the signal with trend. How do we trade this crazy thing with trend now? Well, a pattern 4 says in the book, we put our stop 2 ticks below the low, and then we hold it. Okay, so if we enter below the low, 2 ticks underneath with the book, it's a little convoluted today, but it happened pretty fast. We're in, and then we exit by the 9:45 signal, plus $2.25. Now, if we use an aggressive counter trend entry. We enter at the close of the candle. Our stop is just underneath it. We give back 5 ticks. Womp womp. White signal is below the moving average. We've tried the first aggressive counter trend entry. Now we're waiting for a puncture. We puncture through the white line. Our stop goes above the puncture candle. We actually finish at a loss. 12 ticks. Pattern 4 comes back and says, haha, I'm not done with you yet. We can trade a pattern 4 with a stop underneath the low and see if it goes in the opposite direction. And look, at the close of this candle, our stop is just underneath the candle. And now Mike, Eric, we hold it until 11:10 plus 31 ticks, $7.75. So the pattern 4 gives us 2 options. Number 1, we can try a counter trend signal with very low risk, or we can trade it as a trend continuation through the low, per the book. We get to 11:10. Lynn, is this signal above or below the moving average? It's below. So we get to use the aggressive counter trend technique, ACT. Our stop will go 1 tick underneath the low of the candle. It's here now, Lynn. I don't have to use this one. So if we enter at the low of that candle, we're going to hold it until 12:35, right? So the close of that candle was 44.05 half. Aggressive counter trend, our risk is here. We get all the way to 12:35. That's plus $8.50 or 34 ticks. About a $400 move up. Now, draw your attention to the fact that, Lynn, this candle closed below the moving average at 12:35. What do we do with signals that are in the direction of the trend? It's below the moving average. It's a selling pressure signal. We get in. Our stop is 1.5 the ATR. And Lynn, we exit. Martin, we exit at the opposite time. So here's where today was fun. At 12:35, we enter. Our stop is 1.5 bars away, and we don't go anywhere near it. Oh! Let's put it right where it belongs. $31 or 121 ticks. Aggressive counter trend trade. Act 1. We enter at the close of the candle. Our stop is just below. Boom. We give back 6 ticks. Now that that's there, we have an opportunity for a puncture. The candle goes through the white line right here. We are short. Our stop is 2 ticks, 1 to 2 ticks above the candle, which punctured the line. We hold it, Lynn, until the next signal, which is a what? A pattern 4. So we tried for a long right away. Banks weren't having it. They said, we're not buying here. We're not buying here. No buyers here. Still no buyers. Well, I'm going to short you then. Go ahead. I know I'm going to hold it until 220. So 1 tick under to 220 is a $16 move. What are you starting to notice here? Martin, what are you starting to notice? The winners are way bigger than the losers. Welcome to trend trading. 220. That's a pattern 4. Well, as fate may have it, we know what to do with a pattern 4. We can buy it with a stop 1 tick under the low, and then we can sell it, if that fails, 2 ticks under the low as a trend continuation signal. It's like a puncture. So Lynn, here we go. 220 comes. There's my stop. Now, what do we know before we even start that no other trading system gives us? What do we know at 2:20 Eastern time before we ever place that trade? We know that it's got 20 minutes until the next signal. How many of you get out of trades too early? How many of you get 3 or 4 ticks and then you go back and you kneel in the corner of your office and thank Buddha, Muhammad, Jesus, your pet rock, the sun? Thank you for my 5 ticks. I'm so grateful. And you turn around and it's gone $5, $50, and you didn't stay in because you didn't know how long to stay in. These lines are here because this is what banks are doing at these times, and you don't believe it because I don't know. I don't know how many times I have to show you this. 15 years, 50 webinars a year. It's over 600 times I've shown this to you people. And Lynn came for 7 years. So I must be doing it wrong because I know I have to hold that trade for 20 minutes. And then Lynn, the pattern 4 never hits the stop, and I have to exit by 220. There's $14. One of the customers wrote in the Skype group, software doesn't work. It's only accurate 20% of the time. Here we are. Again. 240, aggressive counter trend trade. Our stop is going to go 1 tick underneath the low. The low is at 69. We'll put it at 68.75, 68.50, somewhere in that area. And then we'll get in at the close of the candle. Right? Here we go. Boom. Boom. Hits the stop. Does it hit the stop? No. But we do take a loss right there. We get back 4 ticks, 3, 4 ticks. 245. We're going to get in short. Hits the stop. Bump, 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 bump. Wah. We have to give 9 of those dollars back. Aggressive counter trend trade. Whoop. We give 3 of those ticks back. 330. Hits the stop. End of the day, we give 3 stops back. Now, look at the day. Oh, I'm going to add up the winners. Ready? Give me a little slack here. 350, 550, 13, 21, 53, 53, 63, 67, 77, 83 on the winning side. Now we subtract 83 minus 9, 74, 73, 64, 63, 60, 57, 54, we'll call it an even 50. So from 7:30 till 3:30, there are $50 of hypothetical profitable trades times $50 per contract equals $2,500 theoretical profit. Using setups that we knew before the market opened, using setups that we knew 1, 2, 3, 4. Testing 1, 2, 3, 4. We're back. Okay, so Lynn, how about the times on the crude futures market? Michael, Tony, Rich, could we have taken shorts all day and known how long to stay in the trade? Could we have gotten in here and gotten out there, taken a stop here, gotten in here, gotten out there, 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 crossover trade, hold it until 238? Where do we get these times from? Did you make all these times up? No, I gave them to 18,000 people 2 days ago. You can come here and look at my crude chart after the webinar and see that these are all the times that we gave people 2 days ago. And we can do it on markets like Ethereum. Here's Ethereum on a 5-minute chart. What if you shorted Ethereum all day today? Lynn, could you have made money? Could you have known, Martin, how long to hold the trade, when to get in, when to get out? Ethereum is pretty awesome when you look at it on a 60-minute chart. You mean to tell me that these guys know in advance when they're going to push markets up or down? They do it every year, every day, every gosh darn day. They're doing it. And it wasn't just today's ES. Lynn, go back and look at yesterday. Here's yesterday's E-mini S&P. They were doing the same thing yesterday. FOMC, right? Here, watch. Closer and closer to the big report. Closes below the moving average. Aggressive counter trend trade. Ready? Enter here, we exit there. 3 ticks. Puncture trade through the white line. Stop is here. We get out at 1240 plus $3.75. Exit short 1240. How long do we hold it? We hold it until 205, another $2. 205, aggressive counter trend trade. We enter at the close of the candle. Stop is below the low. We never hit the low. 325, that's $12.50. Aggressive counter trend trade, 2 ticks. We're out. We take the puncture. We hold it until the next trade, $1.50. Pattern 5, aggressive counter trend trade. We exit, enter short. We exit 1 tick above. We give 3 ticks back. We now enter the puncture of the pattern 5, and we hold it until the close at 415 plus $10. This was yesterday. It's doing the same thing. It does the same thing over and over again. And this works on larger time frames too, right? There was a pattern 4 on SPY that we posted into the SPY trading group the other day, and I told them what the targets would be. We're not quite there yet. The target was the bottom of this box to the top of this box. We got as high on SPY as 437.13. The upside target is 438.39. But Lynn, look at those signals here to the left, right? What happens if you entered here and exit here? What happens if you took this puncture and got out there? What happens if you got in here on the daily and got out there? Aggressive counter trend trade, stop above the candle, boom, there's a short, $11 more. Signal with trend, we exit 913. Aggressive counter trend trade, we give money back. We are below the moving average, we take the puncture, it's stopped out. Pattern 4, aggressive counter trend trade, you're presently up $12.21. Why does nobody believe me? Why does Lynn come to the webinar for 6 years in a row? I don't understand it. Oh, count this as a loser too. That's a loser there. What am I doing wrong? Apple on a daily time frame, if you're using it for options, I've been telling people now for 3 months in all of the stock and options groups on Facebook what to expect. I'm posting everywhere. I have an Instagram page, I have a TikTok page, I have a YouTube short page, I have Facebook. We're everywhere. And I told everyone we're going up from September 22nd until October 6th. Look for calls everywhere you can, buy all the calls. The next signal is coming Friday on the 13th. Some of you bought because I predicted the drop on September 5th. I didn't, the software told us. And that happened. And this works on other stocks too, like NVIDIA. My upside target on NVIDIA, if you remember when I was in the webinar with you guys last time, long from 921 until the white line right here. And today we just hit it. Ding! How big of a gain was that? Well, from here to here is a $57 gain. It's a 10% move. And if we use the same techniques that we used on the lower time frames, long from here to here, there's $42. Long from here to here, there's $43. Aggressive counter trend trade, there's $10 on the put side. This one we're out right away. This one is a stop. Aggressive counter trend trade on 9/14 turned out to be a $45 winner. This seems to be happening a lot. It's happening everywhere. On stocks, on forex pairs, on cryptocurrencies, on futures markets. It just keeps working. 15 years now. There's a random distribution between wins and losses for any given set of variables that defines an edge. Is this an edge? Yes. What don't you have that you could have with this particular edge? The thing that most people need. The thing that most people need and don't have. Number one, you know the times in advance. They're always in the future. Number two, you know how many trades there are each day, which means no over trading. If you overtrade, it's your fault, not the system's. The system told you how many times you had. Number three, you know how long your winners should go. If you get out early, that's on you. Number four, you know to use a small stop. It either works now or it doesn't. That's what you don't have now. For 15 years, I've been telling 40, 50 people at a time in these webinars, 2 days before we get there, what's going to happen. And it happens. $2,500 today. Same signals, same setups, same histogram guidebook reversals. Nothing's changed. No guru influence. I didn't use any of my big brain to finagle my way out of any of the losses. Ultimately, trading is a guess, an estimation about what will happen in the future. And you can't use a lagging indicator to tell you what's going to happen in the future. A lagging indicator, any indicator that is not this tool, any technique that is not this method is lagging. It's telling you what just happened. Wow, there was a big volume spike just now. Not a prediction, a measurement. Wow, the delta right now is really large. Not a prediction. What just happened? It says nothing about the future. Wow, it just closed over the second deviation of my VWAP. Look how red and shiny it is. Not a prediction. Something just happened. Hey, the price of crude oil tends to go up from 10.16 to 11.35 for the last 3 Thursdays in a row. Prediction. Hey, SPY usually goes up 50% on this date every year at this time. Prediction. Hey, the E-mini S&P is expected to drop from 1235 until 140. Prediction. Future. See the difference? Somewhere along the way, the marketing machines figured out you'd take the scraps, the lagging indicators. They're easy, they're fun, they're colorful, they make noises. You can say fun words like Heiken-Ashi and Renko. Hey, honey, come in here. I'm using Renko bars. What's a Renko? I don't know, but it looks cool. Looks like a zipper. Oh, I'm going to tell Margaret later about your zipper tool. And every year, more and more people come and leave disappointed. You can have this. You can own it. And here's the cool part. Everyone else took a risk before you got here. These are people who can write whatever they want, and I'm not allowed to take it down or alter it. This is a website that knows if I'm spamming the website. All of these people have gone before you and sat in the webinars before you got here and took a chance and said, hey, I believe what they said. And they keep writing the same thing. They keep saying the same thing. And some of you see all of that. You see what I've done 2 days later, teaching the executions. You've seen the profits and the losses, added it all up and still said, not for me. I like not knowing. I like suffering. I like taking free trials. I like when the owner calls me and sits there and I can look at his screen and everything looks great that day. I like feeling miserable when I lose again and again and again. I like doing the same stuff I always do. You can change. Imagine tomorrow if you woke up and you saw the times for SPY, you saw the times for QQQ, you saw the times for Tesla, Nvidia, and Apple, and Boeing. You can. Imagine if you took very small risks. To use it on Renko bars, Martin, you buy the program and you use it on Renko bars. I am no longer the dancing monkey at the end of the webinar. You buy the program and you apply the times to your Renko bars. If you would like to know the times in the future, you can. I don't buy the, well, I'm used to it now. Michael, I wear a size 12 shoe, but on my left foot, I wear a size 9 and it hurts. I don't want to take that size 9 shoe off though. Well, why don't you get a size 12? No, that's what I've been doing for years. Well, are you crushing it? Are you living in a mansion? Do you drive a Lamborghini? No, but I don't want to change. Don't change. Keep doing what you're doing. But there are some of you here today who are ready to make money. You are done with your self-sabotaging mode and you're ready to step out like that person who wakes up and says, I'm not going to eat 5 donuts this morning. I'm going to have a hard-boiled egg and some low-sugar orange juice. This is the moment for some of you. The rest of you that don't want to change, don't do it. But tomorrow when you look at your P&L, I want you to remember you could have known the times in the future. All right, so over here, I'm going to paste the link to the page, backtothefuturetrading.com/TachEon TimeWarp. When you click on it, at the very bottom is a beautiful orange button. All you have to do is push it. That's all you have to do is push that orange button. When you do, it's going to take you to a pop-out. There's a pop-out. We have a live trading room that you can join when you get the software. It's $150 a month if you want to come. They meet Tuesday, Wednesday, Thursday from 8 a.m. to 12 p.m. My partner and/or a live trading customer who's had the program for 10 years leads the room and shows people entries and exits in live markets every week. If you want to use that as an aid to get started, you can. If you don't want that type of thing, don't get it. Over here, you'll have a place to put a promo code, WARPOFF. Takes $500 off the software. There will be a price increase this year for 2024. I'm just telling you right now. We haven't increased our prices with COVID or anything. It's been the same price for years. Price increase is coming. Just remember that I said it. When you come here next year and you say, oh, can I have the old price? No. If you want, today's your day. WARPOFF takes $500 off of the price. Get yourself something nice on me. Minus $500. This is a lifetime update, lifetime license, no additional fees or charges. As we make improvements to the program, they're included for free. You also have access to our video training archive for life. There are years and years of videos, but a very simple getting started sequence that you can follow, 5 to 10 minutes per sequence, showing you how to get started. We do have live mentoring available. Myself and my partner, Ron, you can pick our brains if you want to go through stuff together. We also have access now, if you're a customer, there are two options. One is to meet with Charlie. The other is to meet with Dorian. Charlie uses a very simple E-mini S&P system in the morning that he follows. Dorian is an actual customer now who has mastered the Apex investing algorithms. So if you want to get a lesson from Dorian, that's available now as a live mentoring opportunity. Warp is what you need for everything. You can't use Aurora without Warp. Aurora is a plugin for Warp, which provides some additional features. You got to start with the Warp program. Any questions? Aurora is for people who like to optimize things. They want to see the signals on the screen. They want to have probabilities and statistics. They want to see risk-reward calculators. It's a whole other level of analysis. But if you want to start out with us, Martin, you've got to have the basic program. Haron, it's actually really good. If you want to know more, send me an email after the webinar. It's actually in a really great place right now. I'm excited about it. Lynn, any questions? Martin, any more questions? You can have the times tomorrow for Monday, for Tuesday, for Wednesday of next week. They're ready right now. All right, Lynn, thanks. Dave's actually going to follow up with you. Martin, Dave's going to follow up with you. Dave works for me. He's an internal sales manager here, and he works with new Warp customers. And so if you get an email or a phone call from him, please pick it up. Even if you're busy, tell him you'll call him back or whichever. He's really great at helping people find ways to get started with this and becoming one of our next 4 or 5-star rated customers. Whew, another great webinar. I appreciate you guys. We had another great set of results here today. Not all the days are as good as what they were on the ES this afternoon, but we generally have some pretty great success over time. And so I'm glad that you were able to see that, those of you that were following along with us today. Existing customers, I love you. Follow me on Instagram, follow us on Facebook, on TikTok, on YouTube, those channels where I'll constantly be updating new things, setups as I see them throughout the day in different markets. It's a great way to follow. Make sure you like and subscribe if you do. Also check your customer resource center. There are now opportunities to train with me, with Ron, with Charlie or with Dorian, who again is the master of the Apex funded account algorithm. He's qualified for so many accounts and qualified for so many payouts now. It's just an absolute wonder to watch him, and he uses the signals from the Warp program that I just showed you here today. And so that's probably a great investment of your time to spend with him if you're trying to qualify and get payouts. There you go. I love you all. Thank you so much for your time here today. May the wind be at your back. May the sun shine on your beautiful, handsome faces. May the valleys rise up to meet you. May the mountains of adversity lay low before you on your journey. I wish you peace. I wish you prosperity. I wish you a long life filled with friends and family, the family we're born with and the family we choose. And I want you to know that I am for you. I am on your side. All of us here, all 5 of us are on your side. We're here to help you succeed. We're in it for the long haul. This is the beginning of the conversation, Lord willing, for years and years and years. I don't ever want to stop doing this. I love it, and I can't wait to work with you. Have a great weekend, Earl, and check that picture out that I sent you. It's the teeniest little hole. That's what she said. And have a great evening. If you have any questions or you need help, please feel free to email me, Michael at backtothefuturetrading.com, and don't forget to reply to David if you're interested in signing up. If you're watching this on YouTube, you can email David if you have any questions, David, D-A-V-I-D, at backtothefuturetrading.com for inquiries regarding sales, or if you have a particular question for me about what you saw here tonight, always, M-I-C-H-A-E-L, Michael at backtothefuturetrading.com. Be well, everyone. Have a great night, and we'll see you next week. Take care.